Welcome traders. My name is Anurag Singh Tomar, Client Success and Learning Manager at Human Capital. I know how uncertain market can feel and how costly one wrong decision can be. With over a decade of experience in trading, fund management, and mentoring, my focus is to help you see the market clearly, control risk, and protect what you have worked hard to build. So let's start with today's session. So I hope my screen is visible. So let's come on to the 20th Jan data. So this is the data which we have, right? So over here, these are the data which are still pending to be released. One is the Germany PPI data. Yes, it is important for the euro pair and the indices. Then we have the unemployment rate and average earning, including bonus. So why this data is important? If this is increasing, and if there is bonus is increasing, that means people are working overtime. And that is the reason they are getting the bonus. And if they are getting the bonus, the industrial production is going to get increased and the disposable income of the breads also going to get increased. And this is a positive sign for the economy. That means economic activity are going on. So we need to have a watch on this data, right? Although right now the Britain is facing lot of problem, right? And there are right now lot of things which are happening globally is more of a diplomatic warfare. On a one side, UK is standing against the US also. On the other side, it is also standing against the Russia, right? And right now, everybody is trying to make deals with the biggest consumer market, that is the India and China. And we have the mother of all deals with the Europe very soon, which will have a very tremendous impact on the global economy, and India is going to move forward. So this is one biggest development is happening, and soon we will see that the BRIC uh, currencies are also considered as the major currency pairs soon. Within, I think, after this 2026, we will see that yuan or INR are also being trading into the CFD market, and they are backed with silver. Silver is going to play a very important role in the future. So we need to see that. Then for the European Union, we have the current account data, which we have to see because both the countries are facing trouble right now. Uh, because already because of the Greenland issue, Trump have declared the 10% tariff on the euro, and that is the reason euro is being uh, structuring deal with India to cover up that 10%. So we are in a state of war, but that war is happening on a tariff war, right? This is the trade war. Then we have the gold production on year basis, which is in negative percent. But this negative figure is not that much important because previously it was positive and right now they are slowing the production. So it is an indication. If I just click on this, so I'll get a chart over here and see over here, right? So although previous the production is very high and all of a sudden till September it is 5.9% and right now they are slowing it down. And if South Africa is slowing the mining, it is an indication that there will be a supply crunch for gold and it is going to push the gold prices upwards, right? So this is one important data. Uh, the next data is related to the mining production. So again, same. Apart from gold, silver also provide lot of other important minerals like bauxite mines. They have diamond mines also. So we have seen that, and if we see their weekly bond auction, so continuously their bond yield are rising. So those who are smart and if they are not able to invest in this gold bull run, they are investing in the government, which are behind the supply side or into the mining sector of gold. So this is one more indication that yes, smart money is being diverting their investment into the bond market of a South Africa, right? Then in the afternoon, we have the economic sentiment. So this is a survey which is being done by taking 150 best analyst and economist, and they'll give rating from -100 to +100. Zero means neutrality, and the positive figures means that they are very optimistic, and in negative terms they are very pessimistic. So previously it was 34, and right now the consensus is about 33.7 or 35. If market surprise, you will see a sudden spike in the euro against the dollar. And today, the dollar index is the most weakest currency for today. If we have a look on to the currency strength meter. Moving ahead with the time, same kind of data we have for the Germany. Then for the US, we have the ADP employment change. So this is an important labor market data which we have to see. But right now, uh, it's my personal observation that whatever data which are being released by the US is not that accurate, right? Lot of things are not aligning. News and other things are saying the different thing, and data is saying everything is fine, which is not correct. Then at the 8:30, for me, the bond market is very important. So 3-month bill auction, 52 week bill auction, these are the important data. So for a shorter period of time, if we have seen the bond yield are increasing, then it have a direct impact on the gold prices, right? If bond yield for a shorter period of time is going to increase by very high basis point, then the consolidation will come in gold. Instead of investing or parking their money into a non-yielding asset, people will tend to divert their investment into yielding assets like 3-month bill auctions, 52 week bill auctions, right? So we need to see that also. Soon we have the ECOFIN meeting. So this is a group from the European Union, and their meeting have a tremendous impact on the foreign policies of the euro. So this is also very important data, especially for those who trade into stocks and indices, and yes, for the currencies also. So we'll see that. And the last, let's come on to the chart. So we'll share. Let me share you my chart. I think now my screen is visible. And right now, this is the gold chart, right? And Chandan ma'am will discussing that market is in consolidation, right? So you have seen that this is the gap up opening of the Monday. After that, prices have taken a correction, and then again you have seen an impulse for the upside. Now, if I want to design a hedge, so what I'll do first, I need to have my clear biasness that in which direction there is high probability that market is going. So the high probability is that market will go for the upside. So what I'll do first, after hitting this low, I'm waiting for the prices. So first the prices have reached this level, I've taken my buy and I put my sell stop over here. Right? So although this is a very conservative approach and it requires a lot of patience, but for a shorter time period, let's do this on a 15 minutes time period, right? Now, what I'll do over here, right? I'm not picking today's market because today's market is trending, although this consolidation area is a very good hedge area, right? So prices went up, again went down, and again try to move upwards. So I have two reference point, right? This is one point, and this is another point over here. This low, okay? This low, okay?
Right.
Now I know that prices are going to go up, so I placed my buy stop and placed my sell stop also. So first my buy stop have been executed. Suppose my account size is only $1,000. So I should take only 0.01 lot in buy and place my sell stop with 0.02 lot. But prices never executed my sell stop trade and went into my direction. I am in profit, right? Now
Hmm.
let's do the same thing over here, right? Suppose you have taken this consolidation, this area, okay, and you have taken
Hmm.
your buy from here, right?
Hmm.
And you have placed your sell over here, right? Now you need to find the difference between the buy and the sell. So let me write it over here, right? So
Hmm.
I write buy 0.01. I'm taking that you have a very small account, right? So I've taken 0. Buy with 0.01, and
Hmm.
over here I placed sell stop, right?
Hmm.
Sell stop with 0.02. Okay.
Correct.
Now what happens next? That prices went up and again went down and again triggered my sell stop, correct? Over
Yes.
here, right? Now I need to find a exit point of this hedge, right? The reason why I'm designing this hedge to get out of this market at no profit, no loss. So what I'll do, I'll take the difference of this buy and sell. So over here, my buy is from 4675 and 4669, correct? So
Hmm.
if I calculate the difference between these two, so it is almost around 6 points, right? Okay. Now what happens after executing this? Prices again went up. You can see over here, right? But at the time when the sell stop is being executed, I have placed one more buy right over here with, because right now I have sell of 0.02, so I need to make it double. So 0.02 double is 0.04, out of which 0.01 buy is already active. I just need to open 0.03. Okay, 0.03 buy I have taken over here, right? Now what happens? This buy is also being executed and again prices fell down, right? Now again I need to design the hedge, right? So you need to identify the area correctly. Just to give you the mathematics behind it. I'm discussing this, right? So over here again I have to draw the sell stop with, because right now I have buy of 0.04 in total. So I need to make it double. 0.02 sell stop is already been active. So I need to create a sell stop of 0.06. 0.06. Now what happens over here, right? So two buys, two sells, and what happens from this area to this area, prices have went down, right? And if I want to see that how much pips of movement I have been getting over here, so this is the area of 4659, almost 10 points of movement I have seen. But as soon as the prices comes at the level of uh, 4663, which is 6 points below, because whatever is the difference, we have to keep the TP and SL, right? So what I'll do, I'll place my TP for sell at 4663 right over here, and I'll place the stop loss of this buy also at the same level. Okay. Now what happens when prices went down? My sell of 8 lots will be in profit, which is equals to almost 8 multiply by 6 points, which is equals to I think 48, correct? Because I have 8 lots open and it have given me a 6 points of movement in profit. So 6 multiplied by 8 is equals to $48, right? Now same is the case with maybe I've done the calculation correctly. 36, 42, yes, 48. Now I have 4 lots in buy and they have given me the stop loss with 12 points, 6 points from here to here and 6 points from here to here. So if I multiply 12 by 4, I'll get 48 and I can get out of this position at break even, right? So two things which are important over here, right? That is, you need to design your first trade, your first, according to your biasness, from a very important key area or a pivotal area, and you can find that pivotal area when you find this kind of fractal, right? Every time when there is fractal, prices tend to get reversed. That means it is going to give you a unidirectional or single direction trade, right? So you need to design or you need to take your positions according to the biasness. So suppose I have given you the analysis that the probability of prices going up is very high. So instead of taking the downside trade, you should take buy trade. But yes, if you have taken sell from here, right, and prices are going downwards, you are in profit and you can keep your buy stop above this level. Okay, because if the market is trending, the high probability that prices is going to go up, right, very fast. And the same thing is happening over here, right? If we see the current market situation, this, so we have a very one big candle, and right now it is looking that prices might take a reversal, right? But we haven't seen any fractal yet, right? We have the highest high. Previous two candles high are below the high of this candle. We need next two candles also. So we need to wait for this candle and the next candle in the 15-minute time frame. When that fractal is active, then you can take a sell call and sell with a 0.01 lot and keeping your buy stop with 0.002 lot above the high of this candle. Once the fractal is complete, so what will be the two possibility? What will happen? Either the prices will come down and your sell will be in profit without executing the buy. And if your sell is not going to work and if prices came down and get reversed, then your buy will be triggered and we know the momentum is for the upside. So the probability that your buy is going to give you a very good profit. So whatever is the difference between your buy and sell, if market went two times that, in our previous example, we have taken 6 points of difference. If market moves by 12 points into your direction, you will be in profit. Okay, so this is the thing which you have to keep in mind, and this is not a very uh, it's not that strategy which you can apply on a daily basis to make profit. You should take do your analysis, design your biasness, and then take the trade. If something went wrong, right? So instead of booking the stop losses, you can hedge that positions, right? But if you have a very smaller account, $1,000 is also a very small account, so it is not going to work. Yes, it is going to work for $1,000 if your lot sizes are very small, right? So you need to start with 0.01 lot or 0.02 lot. So this is the thing which you have to keep in mind, but this is the strategy which is going to work, right? Because when we are managing fund professionally, we have a contract, right? We have a SLA, and in that SLA, the drawdown is mentioned. Now, suppose I have allotted some traders, two or three traders on that account that one guy is trading into Forex, one guy is trading into gold, one guy is trading into crude oil or indices, and they're trading it. But as a fund manager, I need to maintain that drawdown levels. To maintain that drawdown level, I need to decide that in which script I need to book the loss and in which script do I need to design this hedge. Like for current scenario, I know that everything, even the technical and fundamental, all are telling me that gold is going to go up. If somebody have taken a buy call, instead of booking the loss in that buy, we can hedge it. We know that if prices went down, soon they are going to get reverse and they will go upwards. So what will happen? I've taken one lot, then shorted two lots, then again prices went up. I have opened three lots, right? Place the buy stop with three lots. Now my four lots are in profit. And as soon as the prices went up, my profit is going to get increased, right? But whatever is your running loss into that sell position, if that loss is equivalent to your account equity, in that case, broker is going to close all your positions. So that is the only drawback this having, but majority of time when fund managers or we used to manage the funds, so we have very big accounts, right? Even the 10,000 accounts work very good, right? But lesser than that, even on $5,000 of account also you can do that, and it will give you short thing, right? Then we have the ATR range system also. So what you'll do, you'll draw the ATR line. So I'm telling you a new strategy. So in this strategy, you don't require any TP and SL, right? You know that every day gold have a specific limit to go up, and then again the prices is going to correct to its mean. So what you'll do, you'll divide the chart in according to the ATR value. You can take the ATR value of 2, right? And you draw the horizontal lines over here. And at every horizontal line, you take buy and sell, right? Now, at the last, what will happen, right? It is also going to give you very short profit, right? But you have to keep patience, right? So like this, suppose we have done. Now what happens? I've taken one buy and sell from here, another buy from here, another buy from here, another buy from here. Now I know that over here, the ATR value of the day or of the candle is 4 or 5 times greater. So the probability of taking a correction for the downside is very high. So what I'll do, I'll book all my buys, this buy, this buy, this buy, this buy over here, and hold my sell positions, right? As soon as the prices went down, my this sell is in profit, I'll book the profit over here. When prices went down to this level, I'll book profit in this level. And at this point or in between this point, you can do the math. The midpoint will act as a point where if you get exit, you will be in profit. So I'll book all sell positions over here and get out of the market. And this is going to happen daily, right? Only there are very few chances, very few events. Yes, Chandana.
This ATR value for which we are going to divide the charts, we have to decide from the first candle of the day, right?
Yes, first candle of the day, or you can take the last candle of the day. Even that candle is small, but we are taking a period of 14, right? So according to the 14 candle, what is the average range price movement which we can expect in gold? It will give us, and you can draw the ATR lines, right? Or you can do the multiplication of two ATR lines. Like for example, if I take today's example, so this is the last candle of the day over here, right? And if you see over here we have the data points, right? Data window, right? Just have a look on it. So when I'll put my cursor at this candle, you can see the ATR value is 4.33, which is almost 5 points. So from here, I can take 5. That means what kind of price movement I can expect in gold is of 5 points, right? Now let's have a look. That this is the close price, and now see how much points of movement I'm getting. Almost 5 points. See, from this to this, 5 points, right? My one ATR has been done, and from this ATR I'm getting a reversal. So the probability is very high that prices are going to move upwards. Now, if I take from this to this high, it almost 10 points of movement. ATR value of 2. So this is the beauty of ATR. ATR is being respected by market every day, right? So I am taking only single ATR value. Instead, I can take ATR multiplied by 2, that is 10 points. And on 10 points, I can draw my trend line. I can do that also, and I can take H4 also, right? If you want to
Yes.
apply this strategy which I have given you, you need to take buy and sell, right? In for this, you can use H4. And according to the H4 candle value, you design your ATR lines, and on every ATR line, you need to take buy and sell.
Okay, okay. So
So
on H4 closure only or H4
H4
closure based
closer.
on
So
value.
whichever candle. So if I place H4 over here, right? So the last candle would be around at this, right? At this or this level, right? So you need to take the ATR value of this candle. So which is almost around 30 points. Right. But yes, right now, if we have a look on the chart, so high probability that prices will go up, right? Right now, we have a bullish engulfing and then a big candle. The next candle would be small like this, right? So the next 4 hour, we are not going to see a very good volatility, right? That is the reason we've been seeing this consolidation of small candle. So this big order flow, you just need to, if you want to take a buy, what from where you need to take a buy, draw your Fibonacci by taking the reference points of with this three green candles, which are the three white soldiers, right? wait for the prices to give you a correction up to the any Fibonacci level. If you find, and probability is that they may take a correction up to the level of 50, which is around 4691, right? From this level, if you see prices are getting a U-turn, right? And this is a fair value gap also over here. So prices will come down, touch this fair value gap, which is also our Fibonacci, and then the prices are heading again, getting the momentum for the upside. That is the time to create your buy. Once you have created your buy, whatever pivot point you have find over here, below that pivot point, instead of keeping your stop loss, you can place the sell stop, your hedge. Okay, so this is the right way to design. So we have taken the insurance cover and we take claim only when the prices went below that level. If prices don't went below that level, prices are going upwards, you can trail this sell stop above, right? You can, instead of trailing your stop losses, you can trail this sell stop.
So the sell stop will be the trailing usually has to be done once one candle gets closed, right? Of maybe 30 minutes or 1 hour.
1 hour. So in whichever
But
time frame you are designing, you're taking your trade, that is your mother time frame. All you can watch other time frame also, but whatever decision you want to take, you want to have those decision on the same time frame on which you have taken your call. Okay.
okay.
Okay, so suppose today you have been taking the trades on the basis of hedge fund. Tomorrow, if you are taking the trades on the basis of 15 minutes, then 15 minutes will be your mother time frame. So what you need to do, you need to see 1 hour greater time frame, 1 hour a smaller time frame. So if I'm doing it on a 15 minute, I need to see it on a M1 or M5, or for a bigger time frame, I need to see on a H1 time frame. So you can
Okay.
analyze both the things, but then again came back into your time frame and then try to design your trades. Okay. So this is for the gold. Now let's have a look on the silver also, right? So silver is also giving us a same kind of movement, right? Sorry, this is not silver. This is silver, right? So silver is also into consolidation right now. And if we see, so we can identify if I draw the regression line or the deviation channel at this level, so this is the deviation channel, right? So right now there is no very good trade is happening, right? But yes, we have seen that we have a very big candle, right, which is outside vertical. That means the candle which have taken the low and high of the previous candle. So over here we have this. Now we need to wait that price will have went up. Right now it is into the fair value gap on a very smaller time frame. If you see, now I'm waiting for the prices. So although if I connect the highs and the lows, so this is the current area, right? I need a break of this area, then only I think of taking a buy call, right? Till the time the direction is not clear. So silver is not giving us any good moment. Yes, the probability is that because we have almost equivalent lows, so lot of liquidity is being resting. So probability is that prices may come below the low of this candle, and then from here again we have seen a spike up right from here. So this is the thing. Now let's have a look on the H4 also. So this is the H4. Big gap up, candle are moving sideways, almost more than 8 candles I have done. So the base has been developed. The probability of prices getting reversed downside is very less, right? So whatever movement if you see for the downside is a trap, so don't get trapped into sell. The probability for the upside is very high for the silver. Now let's have a look on the US oil. So this is US oil on a H1 time frame, and this is the area I've been tracking for a very longer period of time, and it is acting as a very strong demand area, and prices have get a rebounds from here. And see over here, right? So this is impulsive movement, then a sideways movement, and all these candles are sustaining its ground above our indicator, which is the alligator indicator, which I have used over here, right? These are the three moving averages. So prices are still above it. So high probability the SLs which are resting over here are going to uh, stopped out by the market very soon, right? So I'll wait for the prices, right? If I find a downward movement from here, and again I'm getting a rebounds, then again I'll take the buy call. Not because the chart is telling me, because the fundamentals are telling me. Because the crude oil demand is going to get increased. We have seen the industrial data because we haven't discussed the industrial data from the China, which have been released yesterday, and on the next day also we have lot of data. So economic activity is increasing. Same goes with the Germany and European Union data, which is the business confidence data. If that data is coming into positive, so it is a sign of optimism. And if there is optimism, the demand for energy is going to rise. And that is the reason taking a buy call in crude oil is very good, right? And if they want to go down, they can break this level, but this is not happening right now. So the probability that yes, prices may give a sudden spike for the upside is very high. Now let's have a look on the Wall Street. So we've been discussing that high probability that prices are trading at an all-time high. We have been trading for a very longer period of time in a sideways market, and now the prices have been reversed. So anytime we have the accumulation phase, right? Then we have the manipulation phase, and then we have the distribution. So that means trending market, then a congestion or choppy market, sideways market, and then a reversal. If this kind of reversal is happening, this kind of reversal going to sustain for a very longer period of time. So yes, whatever price movement which we have seen in the Wall Street, which is the US 30 or Dow Jones, it is an indication that stock market is going to go down. Let's have a look on a daily time frame. Right, so see this. The trending market moves sideways, and right now they are moving downwards. And this candle, the today's candle is below the red line, right, which is the teeth or tongue of the alligator. So the probability that prices will come down is very high. It's very high, right? And over here, if I try to identify that what kind of market structure market is going to make, so over here I have the shoulder, over here I have the head formation. So to complete this head, market prices will come down and then again went up, taken the support from this moving average area. So this kind of movement is being expect I'm expecting into the market, and then again went down. So don't think of taking a buy. And if we see the RSI also, so see this is the highest point, this is the next highest point. So I have a divergence. Then again I have the highest point, right? Again I have the divergence. So we have a bearish divergence. Prices are moving upwards with a very good gap down. So the probability that Wall Street prices or the stock prices are going to go down. Now, in the last, let's discuss the Euro USD on a daily time frame. So yes, we have the very good data to be released for the Eurozone and for the Germany. Germany data is also going to impact the Euro USD, and the USD is getting weaker, and the data is also telling us that the consensus is telling us that analysts are optimistic about the Euro deal. And if the India make the deal with the euro, that is a good sign for the euro. And we seen that euro prices will break this trend line and move upwards. Right now, in the last, and over here, this is the low, this is the low. Again, we have the higher low formations over here. Here we have the lower low, here we have the higher low. Right. Again, it is a bearish divergence. Let me remove this, then the chart will be more clear. Okay. See this low and this low. So let me draw a line from this to this. So we have the lower low and over here into the RSI, we have the low and the higher low. It's a bullish divergence, and see the prices are also moving upwards with the imbalance. So in this candle, we have a small imbalance also. This is a daily candle. So yes, the momentum for the upside is getting higher. High probability that euro prices will going to go up. Now the last part in this we will discuss the BTC USD. So BTC prices are falling right now. Let's have a look on the daily time frame. Okay, so after falling, this is the trend line. Prices have broken this trend line. Let me clear this. Now let me draw the trend line. So this is the latest trend which I can identify, right? So lot of liquidity is being resting below this trend line, right? Which I've been drawing right now. And right now they have broke it. So the probability is that yes, prices of Bitcoin is going to come down and take the liquidity below this area is very high, right? And this area is residing at 85988. That means almost 86,000. That means almost $5,000 of movement we've been expecting for the downside in BTC USD. So my expectation that yes, prices will fall for the BTC USD, right? So we have seen this on a daily time frame. Now let's see that on an intraday basis. So already we have seen 1, 2, 3, 4, 5. 5 is a Fibonacci number, and five consecutive candles we have seen for the red side. So instead of taking a sell is very risky because we have seen the exhaustions also, right? And exhaustion is an indication that somebody have started accumulating. That it is a sign that prices may take a correction for the upside, may take a pullback. So I wait for the prices. I know that the primary trend for the Bitcoin is for the sell side. So instead of taking sell from here, I wait for the prices to come up, right? And this is the concept of premium and discount, right? So I've drawn this area, right? The Fibonacci area and this 50 level. Below this 50 level is a premium area if you take a sell call. And above 50 area is a premium level. So I wait for the prices to give me a correction up to this level. And once they started getting weaker from here, I'll take a sell call from the premium for the downside because I know on a bigger time frame, BTC prices are going to go down. Okay. So that's all for my side, right? Let's see the Nvidia also. So this is Nvidia, right? We have seen lots of gap up and gap down, right? And again, you can see that already it have made the top over here. Prices went down, and right now they are in making a triangle formation, right? So the probability is very high for the downside for Nvidia also. Okay. On a daily time frame we have discussed. So that's all from my side, and I hope the mathematics or the logic which we have discussed related to the hedging, and it is one of the technique. We have lot of other technique also, but it requires lot of mathematics also. So you need to do that. And for the gold, suppose the gold prices are going upwards, right? Right now they are taking a correction. So suppose this is my live account, right? So let me do it practically. So what I'll do, I'll take 0.10 because it's a $50,000 of account. So I'll take a sell call. See, I've taken the sell call, right? Over here, you can see that I've taken sell call, right? Now the high of this candle is 4717. So what I'll do, I'll just go to new order, right? I'll take 0.20 buy stop, right? Buy stop with 4718, right? And just place my buy stop. So I hedged my positions, right? So if prices went down, my sell will be in profit. But all of a sudden, if prices get spike for the upside, my buy will be triggered, and 4710 and 4718. That means 8 points of difference is there between my hedge. So what I'll do, 8 points from here to here, 8 points from here to here, that is almost 4728. will be my stop loss, and this will be the target of this buy. So I'll get out of this market at a break even. This is the way to apply. No rocket science is required. Okay, because and I have designed my hedge from the very top, and the probability of prices is going up is very high. So I have no issue if my sell is successful. So I'll keep the TP below the 8 points, which is at 4700. So this is my TP. If prices went up to this level, my sell will be in profit, right? My TP will hit, and I'll close the pending order which I've kept. Then I'll find new opportunity. But yes, I can visit outside, I can have the meeting, I can have the session, because I know I have created the hedge. If prices all of a sudden went above, my buy will be triggered, my insurance will be active, and I'll be at break even, right? Okay. So that's all for my side. It's time to close the session. So thank you all of you for attending these sessions. We'll meet again tomorrow at the same time with lot of new insights and all. And if soon we are going to conduct the Q&A session on a daily basis for 30 minutes only for the existing clients of BMN at 3:30 or 4 p.m. But still, we've been planning and designing everything. Once it is done, you will have one more service from us. And in that, my other teammates are also going to participate into that, those who are CMTs, right? So you'll get a lot of insights from them also. So that's all from my side. Have a great trading day ahead. Just to conclude the session, we have discussed the hedging technique. We have discussed the biasness of gold and silver, that we are towards the buy side. Then we have discussed the crude oil, that crude oil is moving sideways, and a lot of stop losses are resting above it on a H1 time frame. So the probability of a spike up is very high. Then we have discussed the Wall Street, which is the Dow Jones. We are bearish for that. Same is the case with BTC, but we are waiting for the prices to come into our premium zone. Then we'll take a sell call in BTC, right? And in the Nasdaq also, we are towards the sell side. In the Euro USD, we have the optimistic data to be released, right? Which is the business confidence, which and by looking at the daily time frame, we have seen the strength. So the probability that you find a trend line, descending trend line into the Euro USD, is going to be broken by the market very soon on the data. So that's all from my side. Once again, I thank you all, and this is Anurag signing off for today. We'll meet tomorrow again. Till the time, have a great trading day. Thank you, guys. Thank you, all of
Thank you.
you.
Yeah, thank you.